Hello and welcome to summer. It's Street View for July 2019, and today we're going to talk about not only what's happening now the month ending June, the first half of the year in real estate, but also we've got a brand new listing just over the last couple weeks, 55 Durness. And what an amazing 5-bedroom home this is. Very unique, with its 5th bedroom on the 2nd floor, a finished in-law suite basement apartment with a separate entrance, and it is currently on the market. There'll be an open house this weekend, actually, July 6th and 7th from 2 to 4 p.m. If you happen to be in the neighborhood, pop on by. It's a great home being offered at $1,078,000. And so with that, we're going to jump into the Toronto real estate results. So abracadabra, here we go. We want to know what's happening with the supply side first. We'll talk about new listings. They're actually pretty flat. It's actually down on a year-over-year basis by 0.4%. We can see how that orange bar right in the middle of the chart is June 2019, and it's pretty much in line with the previous year and down compared to the 2 years prior. And what that illustrates is a bit of the seasonal norm that we're seeing right now in this balanced market environment, and it's performing as expected. So how does that translate into the total number of active listings? We actually have a reduction of 5.7%. So to understand the difference there is new listings coming into the market we compare on an annual basis, 1 month versus another, but then there's the cumulative total. And so the cumulative total is very relevant because that represents the total supply that a buyer would have to choose from. And if they feel that there's not a lot of supply, then there's going to be a little more pressure to buy, a little more upward pressure on price. If inventories are growing, then that means there's an abundance of supply and or a reduction in demand. So the dynamic we're dealing with right now is that the number of active listings is down 5.7%. which speaks to the number of sales that are taking place. And that's our very next slide. And so the number of sales that took place in June 2019 is up 10.4%, which is a whopping number. And that's just the number of transactions. That's not price. So how does that total compare with the first 6 months of this year versus the first 6 months of last year? It's actually up 9.9%. It's a total of just about 44,000 sales. And so what's going on there? The insight I would share with you is we talked at the end of 2018 that the total volume of sales was down 17%. So that means that perhaps there was a little bit of shift in demand, that people were pulling back from the process after we had the boom cycle of 2016, 2017, as the graph would illustrate. And now we've returned to this more balanced, slow and steady growth. But there were changes in interest rates at the beginning of April, and the late arrival of spring, let's say, has shifted the demand in the market to where we are today. It speaks to what happened in the month of June as well as what's happened in the year total. So how is this all translating to price? All right, well, price is up 3%. And so when you take a reduction in supply and consistent or increasing demand, guess what? Price is going to go up. And it's not up huge amounts, but 3% is our conservative estimate. That range of 3 to 5% for the year, I think, is still very consistent because affordability is capped out, and we've been talking about that in all of the months of this year, and I don't see that perspective changing. So that is it's kind of boring, but it is a balanced market. And so what that means for buyers, you can go out and not feel too much pressure to buy. You can negotiate in a lot of cases, and we're having fun doing that with some of our clients. But also as a seller, you're getting very fair and reasonable prices. It is not always the multiple offers and bidding wars and prices climbing like crazy. There is still a little bit of that, but it is not the norm. And it differs based on the house type and the locations inside the Greater Toronto area. And obviously we have a lot of fun helping clients figure that out. And we've been quite successful this year. It's been one of the most active years we've had. And I think in large part to, just having a good read on the market. That's our own little self-promotion piece. But I think making a study of the market makes very well educated consumers of all of us. So that's part of my desire, what we're doing here. So the other observation I want to offer with this price growth chart is that we have, since the 2017 correction, which is that green bar right in the middle there, you can see where the green bar was spiking up in the first half of the year, and then it leveled out in May and then June. And then since June 2018, where there was price finally caught up to where it was year over year, that since that time, every month since, you can see that there's been a slow increase. And so while the price overall did see a correction, we've been on a steady march of price increases for 13 consecutive months. And all of those increases have been very, very small, meaning, you know, in that as low as 1% and maybe as high as 4% over a 13-month consistent basis. And once again, I think that supports that idea that we're in a very balanced market, and these conditions are probably set to continue. We have the influx of people coming to Toronto that want to live here. Last month we talked about how Toronto's population had grown by 77,000 people in a one-year duration. That's just the city of Toronto. And that gets Toronto ranking as one of the fastest growing cities in North America. So I think that those things are going to continue, and so we can move right along to our detailed slide where we look at the different types of properties in different parts of the Greater Toronto area. And obviously we love this chart because you can kind of zero in on the type of home you own and where you own, whether it be 416 or 905. And so I know there's a fair bit of information there, but what I'll point out is where and what is growing. And so because we had overall sales were up 10%, where's that happening? So to figure that out, we look to the left side of the chart and we can see the number of sales taking place in the 416 and the 905, and 3,230 stands out in the 905 for detached homes. And when we slide to the bottom part of that chart, it illustrates a 20% increase year over year. So there's a great indicator of where the number of sales are taking place. Family homes in the 905 area, which tend to be a little newer homes, and, you know, 4-bedroom homes are quite common. And, you know, that idea that people are getting homes that suit multi-generational family structures due to affordability. And if you're a new Canadian coming in, that's a viable option. Or if you're a Canadian who's aging in place with other family members to help look after that transition in life. I think those ideas are playing out in the 905. And so what about inside the 416? Well, we can see that in that same kind of lower left-hand side, we can see that townhouse sales are up 17.5% in the 416. And so, you know, there's a bit of a preference there to try and get into something that has 3 bedrooms. That it's the most desirable class of real estate, whether it be townhouse, semi, or detached. 3 bedrooms is the sweet spot. And, you know, for family size and, you know, how people like to use their homes, a spare bedroom, a home office, these sorts of things. And we see that in the marketplace every day. So when we slide over to the right half of that chart, what we love to see is where price is growing. And so similarly, when we see the demand, does that necessarily translate into price growth? Not always. So when we look at that detached home in 905, the average price is $922,000. That represents actually a 0.7% decrease year over year. And so it's interesting, right? There's an incredible amount of supply out there in the 905, and that's what keeps price very balanced. So once again, that's a very fair trading environment, meaning that when you're negotiating whether the acquisition or the sale, you know, prices are pretty darn stable there. And we're having some of those experiences. We have another listing coming up in another 2 weeks out in the 905 that will be a great representation of that fact. The other one, the converse of that is in the 416, where we don't have a lot of vacant land to be building additional housing. When we look at that townhouse, the average price is up to $810,000, and that represents a 9.2% price increase. When there's demand for a certain housing type, price will tend to grow a lot faster. When we have the 905 area, and those are the areas that we do have vacant land where we're building more houses, that's going to keep the supply a little more balanced, therefore price will stay a little more stable. Well, I trust you find that helpful. I'll look forward to speaking with you all next month. Take care. I'm Matt Emerson of RE/MAX Hallmark Emerson Group Realty. Bye for now.